To our first story breaking, we have some of the latest inflation data just crossing. The forecast coming in for this was it to be at 3.6% for the month of October. Last month was 3.8%, and it has indeed come in with expectations, 3.6% for the month of October. As I said, that was what was expected. September had been higher at 3.8%. Core CPI, which strips out volatile energy and food, came in at 3.4%. That was also what was expected.
It's hard times, inflationary costs in a business are ever increasing, and you just wonder, when will it stop?
Paul Kelly runs a turkey farm in Chelmsford. Higher labour costs are forcing him to put up his prices.
We pride ourselves on the hand plucking and the hand finishing of our turkeys. So by its very nature, it's very labour intensive. So whilst we can be as efficient as we can, we have to accept the fact that we've got to pay whatever the labour charges are at the time.
Roughly, well, there's next a few other things going on domestically. It's no more than 50-50, put it that way.
The bank thinks food prices will push the main inflation rate to a peak of 4% in September before it comes down again. But the bank also cut interest rates by 1/4 percentage point, taking the base rate to 4%. It said rates would gradually come down from there.
So inflation steady, but still high, of course. Should we call this a stabilisation, or is it getting stuck a bit higher than everybody would like?
Because, of course, most economists were expecting inflation to go up. The forecasts were for 4% or perhaps 4.1%, and I think that was a big surprise that it didn't actually happen, and particularly because one of the elements that everybody had been worrying about was food. Food prices now seem to be stabilizing. In fact, in the month, they fell. So if you look at September over August. So something that we had all been worrying about perhaps is now becoming less of an issue. And maybe we're beginning to be a little bit more like the Europeans. I mean, yes, food inflation has been happening everywhere, but the UK seems to have had more of an impact.
For years, the United Kingdom has been seen as one of the world's most stable economies, a country with predictable markets, reliable institutions, and a strong currency. But something unexpected is happening, something many economists never saw coming. Across the UK, prices are rising faster than wages. Everyday citizens are feeling the pressure in their grocery stores, in their energy bills, in their housing payments, and even in the cost of transportation. Businesses are closing. Families are tightening their budgets. The middle class is shrinking, and uncertainty is becoming the new normal. But here's the twist. Millions of people across the UK are turning their attention somewhere surprising: Africa. Africa, a continent once underestimated by Western economists, is now emerging as one of the most dynamic, fastest-growing, and opportunity-rich economic regions on the planet. Why is this happening? Why is Africa suddenly attracting investors, entrepreneurs, students, innovators, and even retirees from the UK? And how did a global economic downturn push Western nations to look toward a continent they once overlooked? Today, we break down the hidden economic forces behind this shift, the opportunities calling millions, and the reality driving the UK to examine Africa in a way it never has before. To understand why millions of UK residents and businesses are looking toward Africa, we must begin with the problem that triggered the shift: inflation. Inflation in the UK didn't appear overnight. It was the result of several major global and domestic factors combining at the same time. 1. Post-pandemic supply chain shock. The COVID-19 pandemic disrupted global supply chains in a way unseen in modern history. Factories shut down. Ships stalled at ports. Transportation slowed. Prices of almost everything began to rise. 2. Energy and fuel instability. The UK depends heavily on imported energy. So when global energy prices spiked, electricity bills and gas prices shot upward, placing heavy pressure on households and businesses. Millions felt the impact in real time. Higher fuel costs, higher transport costs, higher food prices, higher household expenses. 3. Wage growth falling behind while prices surged. Wages did not keep up. This is known as real wage decline, and it reduces purchasing power. Families have less to spend, even when salaries technically rise. 4. Housing costs reaching historic highs. Rent in many UK cities increased far faster than income, making housing one of the biggest financial burdens. 5. Brexit effects still unfolding, trade barriers increased. Labor shortages emerged. Import costs went up. The result? Some industries became more expensive to operate, and consumers paid the price. As inflation rose, so did frustration. Many UK residents began asking questions. Why are groceries almost double the price they used to be? Why is electricity so expensive? Why is rent higher than mortgage payments used to be? Why do wages feel smaller every year? This pressure created a new mindset in the UK, a mindset of exploring opportunities beyond the country's borders. This is where Africa enters the picture. The shift toward Africa didn't happen by accident. It happened because Africa itself is changing rapidly. For decades, Western media portrayed Africa as unstable, impoverished, and risky. But now, the facts speak for themselves. 1. Africa has the fastest growing population of young people, while Europe's population is aging. Africa's youth population is booming. By 2050, 1 in 4 people on Earth will be African. This means heavy checkmark, a growing workforce, heavy checkmark, a growing consumer base, heavy checkmark, a growing pool of innovators, heavy checkmark, a massive market of opportunity too. Africa holds the world's largest share of strategic resources. Africa controls enormous percentages of the resources needed for the global economy. Cobalt, gold, oil, lithium, platinum, diamonds, copper, rare earth elements, agricultural potential, untapped, renewable energy sources. These resources are essential for electric vehicles, technology, manufacturing, and global trade. 3. Economies across Africa are expanding faster than Western economies. Countries such as Rwanda, Kenya, Ghana, Botswana, Morocco, and Ethiopia have experienced rapid GDP growth in recent years. Investors are noticing this. 4. The African Continental Free Trade Area, Afcfta, the creation of a single African market, one of the largest in the world, is transforming trade. This means lower barriers, easier business, and faster economic expansion. 5. Africa is the new frontier for innovation. Africa is leading the world in mobile banking adoption. Fintech startups are exploding. Tech hubs in Nairobi, Lagos, Cape Town, Kigali, and Accra are attracting global attention. 6. Real estate and living costs are more affordable in many African cities. The cost of living is dramatically lower than in the UK. This is attracting UK retirees, UK digital nomads, UK remote workers, UK entrepreneurs, UK investors. 7. Strong cultural and diaspora connections. Millions of people in the UK have African heritage. Many are now reconnecting with opportunities on the continent, investing, building businesses, and relocating. Let's break down who is looking toward Africa and why. 1. UK businesses seeking new markets. Companies feel the pressure of rising operational costs in the UK. So they turn to Africa because heavy checkmark labor is more affordable. Heavy checkmark markets are growing. Heavy checkmark middle-class populations are rising. Heavy checkmark government incentives are increasing. Heavy checkmark infrastructure is improving too. Entrepreneurs moving to Africa to start companies. Africa's startup ecosystem is attracting UK founders because heavy checkmark, there is less competition. Heavy checkmark innovation gaps are easier to fill. Heavy checkmark customer bases are expanding. Heavy checkmark costs are lower. Heavy checkmark returns can be higher. 3. UK investors targeting African growth sectors. Investment trends are shifting toward agriculture, renewable energy, real estate development, technology, mining, logistics, manufacturing. 4. UK students and young professionals exploring opportunities. Some university graduates, unable to afford cost of living or rent in the UK, are seeking heavy checkmark better opportunities abroad. Heavy checkmark remote employment in lower-cost countries. Heavy checkmark African universities with strong programs. Heavy checkmark internships in African tech hubs. 5. Retirees seeking affordable living. This is a growing trend. Retirees simply cannot stretch their pension in the UK like before. African cities offer lower rents, lower food costs, warmer climates, larger homes, better quality of life at lower prices. One of the biggest reasons this shift is accelerating is that the global narrative around Africa is changing. For years, Africa was seen only through the lens of poverty or conflict. Today, Africa is associated with heavy checkmark mega projects, heavy checkmark booming tech industries, heavy checkmark rapid urban development, heavy checkmark expanding middle classes, heavy checkmark increased foreign investment, heavy checkmark, stronger political confidence. African nations are asserting themselves globally. They are demanding fair trade. They are refusing exploitative contracts. They are forming new alliances. They are investing in their own industrialization. This new confidence is attracting Western individuals and companies. Here are the 7 major reasons millions in the UK are looking toward Africa. 1. Affordable investment opportunities. Africa offers opportunities that are far more accessible than the UK's expensive markets. 2. Lower cost of living. For remote workers, retirees, and young professionals, Africa offers a chance to live comfortably without financial strain. 3. Rapid growth industries. Africa is becoming a hotspot for renewable energy, green technology, logistics, food production, entertainment, digital payments, healthcare technology. 4. Friendly business environments. Many African countries offer tax incentives, startup grants, and business-friendly regulations. 5. Untapped markets. Africa's population is young and growing, meaning demand for products and services is exploding. 6. Cultural and social connections. The UK has a long history with African nations, including deep diaspora communities. 7. Global strategic importance. Africa is the future center of global growth, and the UK cannot afford to ignore that. What's happening today is bigger than inflation, bigger than cost of living, and bigger than individual financial decisions. It is a global economic realignment. Africa is rising, economically, politically, and technologically. And as Western economies struggle with inflation, stagnation, and aging populations, Africa is transforming into the world's next major growth engine. For millions of people in the UK, the realization is clear. Africa represents a fresh start, a new opportunity, and a path to build a better future. This isn't the end of the UK economy, but it is the beginning of a new chapter, one in which Africa plays a far more important role in global business, migration, investment, and strategic partnerships. The world is watching. Investors are paying attention. Governments are adjusting their policies. And millions of everyday UK citizens, facing rising costs and shrinking opportunities, are looking toward Africa not as a last resort, but as the world's next frontier. Africa is not just rising. Africa is redefining the global future. And this time, the world, including the United Kingdom, is paying attention.